you go. Good evening, everyone. This is James coming from Dividend Stock Talk, where we talk about dividend stocks and investing in dividend stocks for weekly and monthly cash flow. Why do we do it? Because I said so. No, just kidding. I do it because I got my bills coming to me weekly and monthly, just like you probably do. Every week, every month, you get a new bill. It's like, didn't I pay this last month? Yep, but you get to do it again. Yay! Okay, no. All right, let's get a little bit serious. Today is November 8th. It is 11:30 p.m. and I believe they call today Wednesday. Oh, it's a Wednesday, November 8th, 2017, 11:31 p.m. Let's jump on in, see what's happening, because I really want to get to you guys' questions and find out what's going on. All right. Now, if you've been following, you know we trade four or five different kinds of strategies. Let's just log into this one first real quick. So we'll get this one waiting for us. All right, that works. Let's get that out of the way. We're going to jump right on in and see what's happening. Right now we got 7 positions. 2 of them we've carried over from last week. And both of those are covered calls for this week. Now, we're doing covered calls only because every once in a while when you do a credit spread. Now, this account right here is our options account. So we do basically nothing but options in this trading account. Because if you're familiar with the stock market and options market, you know that the stock moves a little bit, but the options move a whole bunch more. What that means is more reward, okay, higher rate of return. But what comes with that is also higher risk. You really got to know what you're doing. So that's why we do 4 different strategies. And I probably a good idea for me to go over the other strategies also, because everybody's not on the same page. We all have different goals. We all have different dreams. We all have different aspirations when it comes to our money and investing. Okay, all that gobbledygook out of the way, let's just jump right on in. AMAT is the first one on our list, so let's put that in. You've got to be kidding me, really? It's frozen. I hate when that happens. See, everything moves. PFE, let's see what we're looking at. And here we go, MAAT, and there you go. All right, so it's that time of day where everybody's online and I seem to be congested. All right, AMAT or applied materials. It looks like it's at 56.92. An update today with applied materials. Lovely. All right, so applied materials starts off the year at the low of the year. Let's move this over because we really don't need that much space here. Come on. Wow. Here we go. All right, applied material starts off at the low of the year, 28, and does nothing but upward movement for the first 7 months. Get to a trading range of 44. Look, see, this is my computer stuck right there. Lag time. Lag time. That's why I want to do something, but my computer doesn't. All right, so she trades at the 44 area for about another 4 or 5 months, and then jumps up to the 56.92. That's where she settled at 56.92. Now, applied materials, which we're stuck at the moment. Come on. Technical difficulties. You can see it right here. See? This thing ain't doing nothing. That little circle, that represents, hey, I'm thinking about doing what you want me to do, says my computer to me. And I'm sitting here waiting like a dumb idiot, waiting for it to move into the direction in which I want it to go. Ugh, that's just frustrating. Kind of makes you want to grab a beer and just take time off. Sorry, I really don't do that all the time. But it is a little frustrating when your computer gets clogged up on you. Kind of makes you think like you need a new computer. I have so much going on in the background. So many programs, so many apps running, that everything else is just congested, stuck. Well, to make a long story short, Profit loss for the day is $2,100. We still went down in the DWDP and CCL. Carnival Cruise Lines, I think that is. Okay, so that's down. That's down. But never fails. At night, every time I turn this thing on, I start yawning. I'm not going to be able to do anything because I'm stuck in a loop. So we are just going to have it at, we're up 2,100 for the day. However, we're down 3,200 from the opening. Now BK, we brought in from last week. We did a covered call on that, so we're mostly going to hold on to that for a while. CCL, we're down 1,100. This looks like it's just going to go downward for us and not do anything. But everything else is up except for Lowe's. But Lowe's is another one we're holding on to. We're not doing anything with Lowe's. So all that being said, let's jump on over to the other account and see if that is up and ready. Okay, monitor. And here it comes. Now this is our dividend capturing. So like I said, we do 4 different trading strategies because everybody is different. Okay, now I don't expect you to go from not knowing anything to jump right into complex option strategies. It just doesn't work that way. It's easier to stair-step your way, find something simple, something easy, something profitable that you can do in your spare time, and you won't lose any sleep at night. That's always the best. That may be just investing in dividend stocks, and grabbing 3 to 4% per year. It's doable. A lot of people are perfectly happy with that. Collect 2 to 3% per year. That's fine. Or you could do dividends on steroids, which is buying the stock 10 days before the EX date, collecting the run-up to the dividend, because the dividend is scheduled a certain day. And we get that right here. Wow. You get that right here on the Market Watch. The Market Watch is basically a calendar that tells me everything. And this is clogged too. Oh, that's so frustrating. And what do you do on live It's not, I can't call it live television. It's a live show. All right, I'm on a live show and my computer is getting congested. It's not doing what I want it to do. Okay, so I'm basically stuck. Here I am trying to do a show, look semi-professional, because hey, I'm semi-retired. I really don't need to do this. But I enjoy doing it because I enjoy passing along my information. Let's go back to where I was a second ago. Oh, this is where I was. Okay. All right. This is a trading account where is just dividends on steroids, where we look to grab the run-up going into the dividend, which means if I buy it 10 days prior to the EX date, that's the last day the stock trades before the dividends paid out. I hold on to it for a couple of days and I wait for it to move up in price. Does it always? No, it doesn't. Perfect example, look at this. Macy's. I've had Macy's since February of this year, and here we are in November. So what is it, 8-9 months? Okay. However, now I tell people the worst case scenario is that you get to hold on to the stock and collect the dividends. Now, if you're investing in stocks anyway and you're buying them to collect the dividend, there's no big deal. You're getting 3% a year. Great, it's better than the CD rate. But by holding on to Macy's and waiting for it to go back up to where I paid for it so I can get back out again, I'm only collecting the dividend. I'm not taking advantage of the turning over the money. So this is trying to be, I'm trying to do what is called a no-lose trade situation. That means I buy a stock, I collect a dividend, I get out, and then I move on to the next one. But I never sell at a loss. And that, my friends, is taking away some trading opportunities, because you only have X amount of dollars to work with. What you try to do is you try to diversify, which means put a little money here, a little money there, and a little money there. Okay? Collect the dividend checks, and then move on to the next one. When that doesn't happen, You just hold on to the company and you collect the dividend. Okay? Now you're only investing in high quality stocks, which means these are companies that you really would not mind holding on to for 3 to 5 years, 10 years, 15 years, whatever your goal is. But by trading them consistently, I may buy Hershey stock 3 times in a year. They pay out a dividend 4 times in a year, but maybe once or twice I may not be in a position to get it for the 4th time. Now, some people are under the misconception that you have to own the stock all year long in order to qualify for the dividends. That's not true. You only have to own it for 2 days minimum. That's the settlement period. From the time you buy it until you're the registered owner, it takes 48 hours or more. Some stocks it's more, but it's usually 48 hours. I'll show you, give you a quick example. Let's go up to the Market Watch, and we will pick ACH. It's the very first company right there. Move that up so you can see it easier. ACH is A.H. Bello Corporation. Now there's 4 dates when it comes to dividends. As the announcement date, that's basically when they tell everybody what's going on, usually right around earnings. There's the EX date. That's the last day the stock trades before the dividend is paid out. In this case, it happens to be 8 cents. Not a lot, but hey, not a big deal. The date of record is 11/9, which is the very next day. So you buy it on the 8th. On the 9th, you become the registered owner. So then you turn around and you sell it on the 10th, preferably for more than you paid for it. And then you actually collect your check or get the money deposited into your account, however you want to do it, on the 1st of December. So there's the 4 dates that you need to know. And that's where they come into play. All right, so all that being said, let's go back to monitor, and here's where we are. ALGT, got 100 shares there. Look at where are we today. We are up 1,300 for the day, but still down 37,000 since we bought. Okay, there only seems to be one company that we're positive with, and that is Hershey. Imagine that. So Hershey, DFS, and AG. Wait a minute. It would be, yeah, Hershey, DFS, and ALGT. Those are the 3 we just bought recently, and then we're looking to get a nice little movement for them. Once we collected the movement, we'll be out and then jumping into the next company. How many have we done so far? Let's open this up. Position and losses. All right, we got 1, 2, 3, 4 losses so far, with Macy's being the big one, and then Tanger Factory Outlet coming up second, and it's tying up quite a bit of my funds. Okay, and hey, that's all the trades that we've done this year in this account. So we have 4 losers, about 5 break even, and all these are winners. Okay, granted, all these winners still don't add up to these, but I'm not selling these, so these I'll keep holding on to them until they recover. How do I know if and when they'll recover? Well, look. Okay, over a year period, SKT had a high of 37 and a low of 22. And what does she do? She goes up, she goes down, and then she even goes sideways. So is she going to go back up to the point where I got it, where I bought it at? She might not. Worst case scenario, I collect a dividend on it. And hey, it's money that I'm continually getting in every 90 days. Is it going to change my life? Probably not, but it's better than keeping it in the bank gaining 1% because the money continually comes in. All right, all that being said, let's go and all right. I'm just going to call it quits for the day because nothing's moving. You know, my computer is going so darn slow. It's just frustrating. All right. So I'm going to quickly check, see if I have any questions. Answer some questions. Why not? No questions. Gotta love it. I did have a question the other day from someone, you know, and it was basically a simple question. Like, how much money do I need to get started? That's a very tough question because you really don't need a lot of money to get started. However, to be profitable, excuse me, to be profitable and get the biggest bang for your buck and get the highest rate of return, it's best to have more than $2,000 because $2,000 at that point will allow you to tap into margin money. Now, do I suggest margin money for everyone? No, only for those that are comfortable with the risks and rewards that come along with it. Are you having issues with my performance problems? Lovely. That being said, $2,000 will help you to, excuse me, to increase your ROI. But you also have to pay for the privilege of using that money, and that is offset by how much you're bringing in. So I really would suggest, $2,000 or more to get started, and then do your math. I mean, don't be looking at $100 stocks if you only have $2,000 or $3,000 to invest in. Okay, be sensible. Look at the rate of return that you're getting. Okay, make sure you get your commissions down as low as possible. You should have them down to $5 per trade or less. If not, call the office and say, hey, is there a possible way for me to get this at $5 or less? There's a lot of us out there doing it. Or better yet, go to a different company that offers lower dollar trades. I know off the bat, I think Robinhood, I think they offer free trades. That's what I heard. Don't quote me on that, but I heard that. Also, just to trade is $2.50 per trade. So that's always a good thing too. But use your math. Find out how much it's costing you to get into the trade, then how much is it costing you to get out of the trade. That's your cost of doing business. Then you take that number and you make sure the dividends you're going to collect or the premium you're going to collect is more than the cost of doing business. Okay. All that being said, I'm out of here. I'm going to have to reboot the computer and do this again for tomorrow. Tomorrow being Thursday, we still have some money to play with. So I probably look at what can I do for a couple of day trades. Maybe do some 10, 15% trades. Because see, the closer you get to expiration, the lower profit margins are available. But still, 10% for 2 days or 1 day of trading, that works for me, providing everything else is in line. All right, that being said, this is James. I'm out here. We're going to try this again tomorrow. You guys have a great day.